Before we begin, this is not financial advice. Nothing I say or post is financial advice. Please do your own due diligence. There is a huge update for Gamestop. Apologies in advance because I think this video will be very long. Without further ado, let me begin with the fact that the breakdown to previous low just changed the entire price structure. And in fact, it is bullish. Before, we had discussed how we had to fill this gap over here, this small gap over here, back in October of last year. And we know that gaps will almost always fill in GameStop. And yesterday's price action, not only did it confirm that the gap is filled, or at least will be filled, but also that the price structure is not a leading diagonal. Remember that leading diagonals will always be a 1, 2, 3, 4, but the 4 would not be breaking lower than the 2. As you see on the chart, I have updated it to be counted as a 1 into an expanded flat and finishing over here at a 2. And remember, in my last video, I had shown many different setups that GameStop could potentially be in. Now all of them have been eliminated, and now the only one left is the super bullish structure. No longer are we going to retrace all the way back down into this purple box that I had for 78.6 to 88.6%, because now the gap will be filled, and after we complete this low here, I don't believe GameStop will break any lower. Of course, what would invalidate this entire count would be if GameStop breaks this 1939 area to about this 1873. I'm counting the impulsive move starting from here only because this kind of move that we had here doesn't seem to be impulsive. It seems more corrective, so I'm counting it starting from here. Essentially what I would be looking for in invalidation is if GameStop were to break the initial move here, which is, let's say 1931, this wick all the way over here. If GameStop breaks this 1931 area, then I would have to remap the entire price structure. But what we're witnessing right now, I don't believe it's gonna break. I had this parallel channel set up, this one here, because again, with the leading diagonal, it would not break the lower lows and would roughly be trading within this channel over here. But now we have the confirmation of an expanded flat, as an expanded flat. This move, A, B, and C over here. So we can get rid of this parallel channel. And of course, because this is an expanded flat, I am expecting the price to go closer to the beginning of the wave 1. So I wouldn't be surprised if this terminated even lower into $19. That would not surprise me. But of course, it should not break wave 1, which is the 1931 I was talking about earlier, because if it breaks, then that's when I run for the hills. There's going to be a huge structural change. But what is amazing is that once wave 2, this wave, completes, we're looking towards the most impulsive wave, that being wave 3. If we plot the Fibonacci extensions, I'm assuming that wave 2 will terminate somewhere near wave 1. We'll see that there is some confluence. There is some confluence from the larger degree waves and the smaller degree waves. So if you can see, we do have some confluence at the 1, of course. We have some 1.382 and 0.5. This one is a strong contender of 3 and a 1 extension. This larger 0.5 and 3. Of course, this one, which is the 0.618, 1.382, and 4.236. History often rhymes, so if we were to project where wave 3 will terminate, we will take a look at the previous runs. The original run that we had, arguably, it ran up. If we go back to the original run, arguably, it had run up all the way to this area, which is the 1.618 level. And then it proceeded, of course, into a running flat. Seeing that 1.618 is the most common and is the golden ratio, let's just make that assumption that this run that we're going to be in, it will run up to also 1.618, which is about $51.07. If this smaller degree wave 3 ends at 1.618 at approximately 51.07, and then retraces back down to around the 1 level, because in an impulse wave 4 cannot enter wave 1 and wave 3 cannot be a diagonal. So let me just plot this out. If we had this one finishing up over here and wave 4 completing at, let's just say, around this area, lock it, we can see that if we did the initial run, the wave 3 into the wave 4 area here, there's even more confluence in the Fibonacci levels. This gets a little technical, but you can see that this 0.618, it goes to the previous high. And then also we have a lot of, again, confluence here. We have the 0.786, 0.786. We have the 1.236 with the 1 and the 3, 1.382 with the following here. We have a bunch of them over here, and then of course this very popular area over here. And again, we already know that this 0.618 of the larger degree fib is a very strong contender for the top, and we can see that there are so many levels over here. As I've said since the very beginning, I am waiting for this larger wave 3 to finish to have some inkling of where the next leg up will be, and this has not changed. But let's not get ahead of ourselves and let's clean up the chart. So let's ignore this and this and just leave these two and this, and leave these two large Fibonacci extension levels. So first thing is first, nothing has changed with my price targets I personally have. Strong contenders being the ones with the most confluence in Fibonacci levels. So again, the ones that I showed you. But even ignoring the smaller levels, we just take a look at these two large Fibonacci levels. We can see that there's obviously a very strong resistance or confluence over here. There's a bunch over here. There's like a small area of what do you call it? Just Fibonacci's in this area. And of course we have this over here, and then yeah, you can plot it out on your chart. You will see just that there is confluence in these levels. Second, if you believe that we are in a larger impulse wave, as in as in a 1, 2, 3, 4, 5. If you believe that we are in some kind of larger impulse wave where 3 is very extended, is usually the longest, 4 does not enter territory of 1, and 5 is approximately the same length as 1. This is a very typical impulsive wave. If you believe that we are in a larger impulse wave, as in this is a 1 into a long 2 into a 3 into a 4 and then a 5. If you believe that this is impulsive, then you would have much higher levels. The minimum for the next leg up being the Fibonacci 1 extension, this one over here, of the initial run up, and potentially higher just for this larger wave 3. However, if you're tracking this next move as a C wave that I have over here, which I personally am, you would be anticipating a lower target. The most common being, of course, the 0.618, the 1, and the 1.618 Fibonacci extensions of, again, the original run. So what differentiates the two groups is how this larger wave 3 will behave, which is exactly why I am anticipating the next move up the most. So if group A is the impulsive, sorry, let me just draw this out. This would be the impulsive, and if you were to follow the ABC pattern, it would be an A, B, and then C. This would be the corrective pattern. So if group A is this impulsive, and group B is this corrective, then what we have coming up soon will show who is right and who is wrong. So let me explain, and let me remove this first. So group A, wave 3 is an impulsive move. And on the other hand, group B, wave C, can either be impulsive or diagonal. More specifically an ending diagonal. So either we have, of course, wave being the corrective phase, this wave C can either be impulsive, as in 1, 2, 3, 4, 5, or it can be a diagonal, which is an ending diagonal more specifically, which is A, B, C. Hi, future me here, realizing that I messed up with the explanation. Let me just reiterate. So we have group A. Let me just draw it out, and let me actually clarify everything. Group A, group B. We have this group A, and then we have this group B. We have, for this, if you're in group B and you believe that we're in the C wave, this C wave can either be impulsive, 1, 2, 3, 4, 5, or it can be an ending diagonal, which is also 1, 2, 3, 4, 5, but it would look different. It'd be a 1, 2, 3, 4, and then 5, something like that. So either way, it is a 5 wave count for group C, which is the same as group A. It's still a 5 wave count for group B, where we are in wave C, which is the same as group A if we are in an impulsive wave 3. So both will be a 5 wave count. The only thing is that if we are in an impulsive one, we cannot have a any kind of diagonal in an impulsive 3. But we can, however, have a diagonal in wave C over here. And also wave count, sub-wave count, same thing. If we're doing impulsive, of course it's 1, 2, 3, 4, 5. However, in a diagonal, it would be only in threes, as in A, B, C, A, B, C, and then same for every single wave. A, B, C, so wave 3, same thing. Wave 4 would be the same as wave 2 but smaller, and then wave 5 would be the same thing as 1 and 3 but smaller. So in the lens of group A, wave 3 being impulsive means that we should not, or at least be very unlikely, to be terminating its move at this Fibonacci level 1 at 115.64, because there would be little to no room for wave 4 to complete, as it cannot enter into this wave 1 area. So ignoring this, let's just get rid of this and declutter a little bit. So now I'm referring to this larger 3 over here, because let's just make it visible. If you expect this wave 3 and you're in group A, where you believe that we are in an impulsive move of a larger 3, we would have, of course, 1, 2, 3 somewhere, 4, and then 5, where it terminates. This one smaller degree impulsive wave would terminate into, of course, the larger 3, because every wave consists of smaller subwaves. So essentially, if you think that this larger 3 here that we're currently in terminates at this 1 level, it would be very unlikely for, well, basically it would be impossible for wave 4 to enter wave 1. So at most, what we have is a retracement back down from 115 to potentially, it'd be a 41% retracement, and it would go back to $66.43. Only then would it still be an impulsive wave that is valid. And I'm saying this is unlikely. It can still potentially be possible, because we know that if we had a retracement, we put a retracement, Fibonacci retracement, if we see that, if we drag it from the initial 2 into a 3, we can see that if we had a retracement of 23.6%, it's still valid. It still validates the entire impulsive move. But any lower and it becomes invalidated. We would not be able to touch this 38.2% retracement. So again, even if we were to plot this out as so, we can see that if this larger 3 terminates here, at this Fibonacci level 1, it can only retrace back down over here. There's very little retracement that it has to still have this impulsive move validated. Any lower and it would break the impulsive wave and essentially become a leading diagonal, which again is group B. And given this, if you believe in the impulsive wave, given this, the likely termination zone would actually be at this 1.618 level, which historically, again, has been a strong level for Gamestop and also the most common level for any impulsive move. So that would mean that wave 3, the one that we're currently in right now, of course in one larger degree, that would mean that wave 3 would be terminating at this whopping $369.55, more or less, before it consolidates and into a wave 4 and breaks even higher highs with its finishing wave 5 move. Conversely, if in the lens of group B, Wave C, essentially this one, so let's just hide this for a bit, or get rid of the color and the lines. And let me lock it. Essentially, if you're in group B, you would be counting this entire thing, the entirety, as an A, B, and a C. Wave C would either be impulsive or an ending diagonal. So wave C being impulsive would only mean it terminates at the same levels of group A. More specifically, wave C is equal or larger than wave A. So that means that it will top at a minimum of the larger Fibonacci 1, which is $1,848. And then, of course, if it extends to, if it's larger than the wave A, the more likely one is 1.618, which is $47,000. However, if wave C is an ending diagonal, and an ending diagonal would look something like this. A lot of overlapping, but you would also see, so you would see wave 4 entering into wave 1. You would see that wave 1 is relatively like the largest one, and if you were to draw some kind of trend line, you would see it as some kind of wedge. It would usually be some kind of wedge looking move. So this would be essentially the ending diagonal. And not only that, but of course diagonals will be moving in threes. So you would see it as an A, B, C, A, B, C, and of course the same for all of them. This will be the same for 3, 4. This will be the same for 2, 3. Oh shoot. Same for 2, 2, 3, and also be the same for 4 to 5. But of course, as we progress into the ending diagonal, these moves would be like smaller, because again, wave 1 would be really big. Wave 3 would be smaller than that, and then wave 5 would be even smaller than this. And you would see it just dragging, and you would know that if you pull up the RSI, you'll see that this move here, so let me pull it up, RSI, you would see that wave 1 would be the strongest wave, the strongest relative strength. Wave 1 would have the largest relative strength. And then once we get to wave 3, it would be diminishing. So you would see it like diminishing like this, essentially what we have now, except it's not in it's not a ending it's not a diagonal. And then again, it would be, if we go into wave 5, it would be even lower. So that is what would happen if you were in group B and you were counting this as a wave C and you were expecting it to finish as an ending diagonal. And also, the thing is, if you were in group B and you were thinking that it's going to end as an ending diagonal, then the very likely termination would actually be at 0.618, which is $248 roughly. And the reason being is because whenever we have, again, like what I said earlier, whenever we have a diagonal of any structure, whether it be leading or ending, there's always waning strength. There's always strength in the strength in RSI, strength in volume always starts going down. It will be going down while you see the price actually going up. So again, you would see that there is some divergence in there, which is again why we wouldn't expect it to be running all the way up to one extension, and it would more likely be ending at the 0.618 extension. So with that being said, that means that the likelihood of wave 3, right? I mean, we'd be tracking this wave 3, it'd be the same thing, because the larger wave C will be moving in an impulsive 5-wave move, regardless if it's a diagonal or a impulsive wave. If you're counting it as a ending diagonal, you would expect wave 3 to finish, like the likelihood of it finishing at this one level or even less is very high. It'll be very, very high. So let me just draw it out for you, because if you believe that wave C that we're in right now is a ending diagonal, then it would be like a 1, 2. Of course, 2 is now here. So actually, no, 2 is still here. It doesn't matter. 1, 2 into a 3, which is slightly higher than a 1. So it can literally be anywhere from 1 to 0.786. It doesn't even need to reach anywhere higher here. Once it reaches higher here, it doesn't make sense for it to be a ending diagonal. And then we would see wave 4 obviously entering into wave 1 territory. And in this case, it would literally be valid even if it went all the way back down into the 25 area or even the 20 area. As long as it doesn't break this larger wave 2, it could still be an ending diagonal, as long as we finish the wave 5 and the final wave into this 0.618 area, because the macro structure of an ABC will likely terminate at 0.618. And of course, these are my personal price targets, and they will not change until price structure shows otherwise. And one last thing I want to talk about is alternation. Alternation is essentially the wave structure alternating of the corrective waves, such as 2 and 4. There's basically two styles: a sharp correction, where it just goes pow, and sideways correction, where of course we have some kind of flat structure or triangle or something. So sharp corrections are very steep in comparison to the larger trend, and while sideways corrections are up and down back to its original starting level. So you can see that B will, or like, well, yeah, if B will likely be somewhere around the starting level, and then C, or the next move up, will be somewhere around the A level, and vice versa. So let me show you a good example of this by using actually SPY. So we saw that back over here, back in April, in this area, we had a very sharp move up and then a sharp move down, and we know that would be a wave 2 correction. And then of course we would see this that we are in right now being a sideways correction, because 4, we are seeing this moving sideways, essentially sideways, before we finally get a final move up into wave 5, and then we start retracing all the way back. And what we have right now, of course, in wave 4 is either, you know, some kind of flat correction, or a triangle, some kind of triangle, because of the shape that it's taking. But we know that, of course, by taking a look at this, we can easily see that, oh, we have this initial move up and then a very sharp drop down. That would be a sharp correction. And then what we have now is, oh, obviously we finished a 3 and now we're correcting sideways, which of course is either some kind of flat or triangle or combination. Only time will tell. And even if we were to go back to GameStop over here, we can see that the same is true. If we go back into the move in April, so essentially this one right here, April 2024, we can see that we have a very small sharp correction, like literally right here, sharp correction, 13%. And then, of course, we had a sideways correction over here, 13%. It was a sharp, and then up, and then sideways, and then boom, pop. If we go back all the way to the original run over here, not at the very original, not the very start, but near the end of this move over here, which is essentially the wave 5 move, we can see that the same is true. It looks exactly the same as the run in April. We had a sharp move down, of course, this one, and then 2, we had a sharp move down, 27%, 20 something percent, and then we had a move up, and then we traded sideways. So again, sharp down, up, sideways trading, and then boom, up. If we zoom out and look at it from the very start of the sneeze, it can be argued that alternation is also true, but of course less obvious, as we had this sharp correction here from a 1 into a 2, 38%. And then, of course, we had the running flat over here, where it's just running up. This would be sideways trading. And sideways consolidation. So basically what I am expecting is, because of this expanded flat that we have now, right? We had the, wait, where'd it go? I just hit it. We had the 1 into this expanded flat 2. Because of the expanded flat price action we had for a few weeks, right? Essentially it started all the way back in January. Because of this movement that we had for weeks, I fully anticipate the smaller wave 4 to be a sharp drop, just to shake people out, because of, again, the alternation rule. It's not really a rule, but it's just something that's very common. And this is also why I had said earlier, with the golden Fibonacci ratio of 1.618, of course the 1.618 level, right? We can safely assume that it can drop all the way back down to the Fibonacci 1 level. So in this, oh, what just happened? Okay, 1 second. Okay, it's back. So essentially, let me just plot it out again of the smaller degree wave that we have here. If we had, assuming that we finished somewhere there, if we had okay, whatever, it doesn't matter. If we had wave 3 finishing at this 1.618, of course we can have the wave 4 being a sharp drop down, and it would still be valid if it hit this 1 level, as long as it doesn't break into the wave 1 before we have some kind of hopefully explosive move as a wave 5. Essentially because, or just to reiterate, we had this long wave 2, which is a flat correction. Technically, wave 4 favors a sharp drop. So if we were to hit wave 3 here at 1.618, the move down will be, of course, very scary and very fast too, which will be exciting. It's going to be a sharp drop into the next leg up. But we wouldn't be waiting for wave 4 to take as, we wouldn't expect wave 4 to take as long as wave 2. So again, be cautious, because once volatility starts rising in GameStop and in the price action, I would expect wave 4 to be a complete sharp drop, a sharp correction. And honestly, this assumption of wave 3 finishing at 1.618 as an impulsive move, and then 4 going back down to a 1, is actually quite conservative. If the move is truly an impulsive move, it is conservative, as we know that waves does not need to complete the third wave does not need to complete at this 1.618 level, but rather it's just a favorable level, which is why wave 3 is very important. Where what we have now is what we're going through right now is very important, because it tells us a lot about what to expect after, assuming that wave 3 terminates even higher. Of course, the higher it goes, right, then the more likely the final wave 3, or the larger wave 3, will complete at a much higher level. So now the chart is a mess. Let me just take some time to fix it. And wave 5 somewhere. So if wave 3, the smaller wave 3 that we're gonna enter or start very soon, if wave 3 completes higher than 1.618, the higher it goes, the better it is, because essentially the higher it goes, the more it validates that the move is an impulsive move. And if we know that the move is impulsive, then all of a sudden we don't have to worry about this being the top. And in fact, this one level of the largest degree, this 1848, seems to be very, very likely. So again, this is why wave 3 right now is very important, and it's something to really look forward to. But of course, GameStop being GameStop, wave 3 usually terminates at 1.618. And then wave 4, wherever. The most important one, historically speaking, is that the squeeze-like move for GameStop always happens in its final impulsive wave, that being wave 5, the final wave. It's true for the run in April, and it's true for the very original run. So with that being said, even if wave 3 were to terminate at 1.618, we would be looking for some kind of explosive wave 5, which will essentially finish the larger wave 3. Obviously, it's still too early to tell, but if we have, if history repeats itself, we would hit this 1.618 level before we have retracement, and then we have another squeeze-like move of wave 5 into wherever it goes. So it is entirely possible for wave C to terminate, in the group B, for wave C to terminate at this 0.618 if we had a move like this where it goes 1, 2, 3 into a 4 and then boom into a 5 and terminate the entire structure right over here. Because even if we were to draw this level that I did earlier in the video, we see that there is again confluence here. There's a lot of confluence in this area. So it's not off the table, and is also why we have to see how this larger wave 3 terminates at. Again, if it's kind of confusing, because if I'm calling this as a wave 3 but also wave C, it just again depends on which group you're actually in. Are you in group A, where it's very impulsive, where you're counting it as an impulsive move, or are you in group B, where you're counting it as a corrective move? At this point, I feel like I'm repeating myself. So, but one last thing before we go. COS has actually been making moves earlier than GameStop. So Cost was actually the one that broke out of this what do you call it, this diagonal structure, right? Cost was the one who actually broke out of it first and then bounced back into recovery mode, which is what we see in these past few days. So when Cost broke out of the channel, like essentially when it broke this area right here, when it broke out of this, GameStop was still trading within its channel. However, once GameStop also broke out, I knew that Cost was moving ahead of GameStop. So as of right now, I will be tracking Cost more closely as it seems to be leading the way. And the basket stock theory so far seems to be credible. And the good thing is that even if we take a look at Cost right now, we can see that it is respecting the Fibonacci retracement levels. So only time will tell, but hopefully Cost is gonna start its reversal now. Anyways, I leave this. This is what I leave you with. So best of luck, and of course, thank you for watching.